if we're live. I think we're live.
I think we're live. Hey, everybody, this is Michael Copeland with Dean Hansen Agency of Farmers Insurance. And of course, my counterpart, Cindy Coggins with Cindy Coggins Realty. And we are C Squared Insights. And we just are recording a little show to give you guys a little bit more insight into the credit repair world. And we started talking with Cliff, and Mr. Cliff, I just got to say this. You've got a lot of great information. So we decided that we'd have an after show just to get a couple more questions out there to everybody and let them join in. Maybe somebody live has a question. I will say this. We were talking about running balances on credit cards, and I want to make sure that I understood you right when you were talking about that. You said that you would like to have a little activity on it so it shows good and up to date. So for instance, if I have 3 credit cards, I should use one at the gas station and I charge $25 to it, and I should pay $20. And then the next month I charge $25 to it and I should pay $25 to keep that $5 on there, but keep paying on time. Did I understand that correctly?
Yeah, Michael, that's most important for people that are new. So when I'm speaking with somebody and they never had a credit card in their life and we're establishing these brand new trade lines for them, I want them to leave a little open balance. So again, if you charge, first of all, you want them to keep it at 25% or less of the credit limit. So if you charge $50, pay $45, because if you pay the full amount, you charge 50, pay 50, you're doing the right thing. But it's possible that when that gets reported to the credit bureau, it may show a zero balance. So for me, thinking a little bit outside of the box and saying, okay, this is a tool to build credit, let's not show when there's no history, let's not keep showing a zero balance to give them the opportunity to think there was no activity on the card. So for me, the same thing, pay everything less than the $5. You charge 50, pay 45, leave that little $5 balance. No matter what the credit limit is, the interest rate is going to be, it's still going to be a very small 50 cent, 60 cent interest rate on. So this way it'll show there's always activity, the payment is on time, and that's going to help the scores go up as you start getting a little bit of traction of using the card month after month. It may work the other way, but for the sake of 50 cents as a tool to build credit, I'd rather see somebody do that. Now, for the two of you that have aged cards and you've had them for many years, it's not that important because you have that history of making those payments. But for somebody brand new, I'd rather do this way to just give them a little bit of an edge, possibly.
Very interesting. Very interesting. I think so many times we have just been told over and over, don't have debt on your credit card. Mm-hmm. And now you're telling us that to keep that small amount, that way it will show up that we have had activity and they can report that we are in good standing and not just not using our cards.
Yeah, the credit cards are important. There's so many people tell me I don't want credit cards, but 30% of the credit score is the utilization of these credit cards, what kind of balances you're keeping. So if you don't have credit cards and you're missing 30% of what's creating a score. So even if somebody doesn't want a credit card, I tell them still get yourself a small secured card, buy a tank of gas, buy some groceries. This is what you're using your debit card for anyway. So let's use this as a tool to help you increase your credit scores.
Well, I guess I need to go apply for a credit card.
Exactly. So you said that credit cards make up 30% of that score. What makes up the rest of our FICO scores?
The biggest factor is 35% of his payment history. So if there are lates, if there are charge-offs, collections, those derogatory is what's going to pull the scores down. So the best way to always increase credit scores is removing the negative and building the positive. So that's 65%. The rest of it is credit inquiries, how long you've had these cards, what kind of aging. There's a lot of other smaller factors in it, but the biggest 2/3 of your credit score is the payment history and the utilization of the credit cards.
That's very interesting. Like I knew a little bit about my credit score, but I feel like there's just so much more to it than just anybody actually knows about it, let alone understands it.
Yeah, the bureaus are not our friends and they don't make it easy. There's Vantage scores, there's FICO scores. Within the FICO umbrella, the car guy, the credit card guy, the mortgage person, everyone's pulling a different FICO version. So we could have a lot of different scores. Matter of fact, one of the consumer sites out there is called My FICO. And if you go on there, they're going to show you every FICO version. And it just confuses people to see dozens of different credit scores.
Thank goodness, because I thought I was the only one getting confused.
Yeah, I've been
Well, I
doing this
think
for
it's just
9 years,
really,
and I agree it is confusing.
it's really interesting, to learn. And let me kind of flip over. I think that Barry said that he's in my background, said that we have a question. Let me peek over here and see if I can find that question. Bear with me for just a minute. Let me see if I can find that question. Y'all go ahead, and while we're looking that question up, and then I'll interrupt you in just a minute.
Okay. So Cliff,
Yeah.
I don't know as much as obviously you when it comes to this, and the firm belief that I have is that you can hire amateurs or you can hire professionals. If you hire an amateur, it costs less, but it costs more in the long run.
True.
So when you're looking at these credit situations, what is like the average that somebody spends to quote repair their credit? Excuse me.
All right. So the typical company on the internet that's doing disputes only, that are cherry picking and not telling people that they're only going to do a few a month, most of them are somewhere in that 79, 99, 129 range per month. These are consumer disputes that we could do for free. And there's really not a lot of benefit of using those companies unless, well, I just don't have time. And I understand that you're paying for a service. What bothers me is that these companies are not telling people that they can only work on a couple of items per month. And I hear stories of almost daily people telling me they've been ripped off by some companies 2, 3, 4 years. So if anybody's looking in the credit repair industry, certainly do your due diligence of who you're going to speak with and what the process is. And for the most part, disputes are something you could do for free, not to need to pay somebody. Our process is using federal consumer law, very aggressively going after every negative from day one. So it's a very different process that we're going to do because these laws like Fair Credit Reporting Act, Fair Debt Collection Practice Act very much protect us as consumers, what's on the credit report, how we could do validation demand under federal law and not dispute the bureaus, the collection companies, or the creditors.
Oh, we've got a question that says, what are some of the tips for first-time home buyers to raise their score up and get a better rate in their mortgage?
Yeah, the best thing is to first identify on the credit report if there are any derogatories. Are there late payments? Are there collections? Are there charge-offs? Because that's going to be the biggest pull down on the scores. That's 35% of the score. So if you do have derogatories, you want to delete as many of them as possible to make the scores go up. 30% be revolving credit. I'm going to always advise where one credit card is good, 2 or better. Get yourself 2 secured credit cards if you don't have them. Use them in a small way, buy some gas or groceries. So removing negatives and building positive is going to put the biggest boost on your scores.
Very good.
So I might be speaking for, some people, but not everybody. But one of the reasons why I don't really carry credit cards is because I don't want to be tempted. I don't want to live beyond my means.
Yeah.
And if I got a credit card, I know that, I guess maybe a low limit credit card. Is that what you would suggest for somebody who knows that they might be a little tempted?
Yeah, there are secured credit cards that start $200, $300. So even if you got crazy and maxed it out, it's not the end of the world how much money you owe. But for credit reporting purposes, for the algorithm, it's important to know if you have a $300 card, you owe $280, but you keep making a minimum payment every month and it never goes down, you're still going to be losing points because of the high utilization on the card. It's important to always keep it at 30% or less.
So it seems to me that the number that I keep hearing a lot is 30. So basically 1/3 of everything is what you need to be at, 1/3 or less.
Yes. Well, even at you don't even want a third because at 33% you're losing points. As soon as you go from 30% to 31, okay, you're starting losing some points. So you really want to keep it at 30% or less.
Good.
Very interesting.
So do you have any advice for folks that are just really starting out to build their credit? Say some of our high school and college graduates that are out there. What are some of the tips and tricks that we can give these young folks that might help them along their journey?
Yeah, certainly is to start with at least one secured credit card. And as I mentioned, just buy some gas, buy some groceries, use it in a small way, make the payments on time, and start building. I could give, for example, my own son, even at 20 years old, because I got him a credit card to use. And I always made sure the payments were on time. And there's a point I looked at his credit report and he had a 700 credit score. So it's a matter of using it, but use it wisely. At some point, if you miss payments, it's going to make that score drop, quite
Absolutely.
a bit. So it's understanding credit early on. And unfortunately, we're not taught this in school. We go to school, we're learning trigonometry and all these things that are so important in life. It'd be nice if they taught us whether it's credit or even how to balance a checkbook, real life skills.
That's for sure.
Mhm.
I tell you, it makes it tough on them because they get out and they don't know how to handle their money.
No, absolutely not.
I think it's very important.
Yeah, and so much
of
and so many of my conversation with people, always start with when I was young and stupid, but it's more the young and uneducated because we're not taught this. There's so many people I speak with, they're in their late 20s, early 30s, the career is going well. Now all of a sudden they want to buy a house, maybe they're getting married. And basically I just toy with it and I go, okay, we're just going to clean up your 20s.
Sure. Very good.
So I just got a text. I don't know why they didn't comment on Facebook, but they said, you said secure credit cards. Hold on. I'm sorry. Where do they look for secure credit cards?
All right. Depending on the bank, who it is. I mean, the big banks are Wells Fargo, Bank of America, and Capital One is the king of secured credit cards. There are some second tier banks like Credit One Bank, First Premier, First Progress, Merrick Bank, that are all players in that market. And what a secured card is, it reports to the credit bureaus the same way. But if I gave you a $300 card credit limit, you're going to send me $300 at the bank. I'm going to hold it as security. So in a sense, I'm setting up a Michael savings account. That money is sitting on the sidelines. So if you never pay the credit card, I already have your money. Now, many of the banks, once you build that relationship, a year or whatever the terms are, and you've never missed a payment, they could convert it from a secured card to a regular card and just send that security money back to you.
Okay. So what happens if you might be a local insurance agent that likes to use a local bank?
Yeah, as long as they have, you can ask them if they have secured credit cards. This is for somebody that's starting out that just doesn't have any history.
Gotcha.
Yeah,
Okay,
and there's
so
a lot
sounds...
of credit unions also. Some do, some don't.
Excellent. Well, I'll tell you what, Cliff, I hope that a lot of people jumped onto this and got this good information, because this after show, if you will, is very enlightening. And I mean, I thought I got a lot of the conversation that we did in our interview, but this was excellent as well. So thank you very much for your time.
No, my pleasure. I enjoy educating people. There's so many things that I didn't know when I got in this industry 9 years ago that I wish I knew then, what I know now. So now I get the fun part of educating and helping people, which I enjoy.
Well, Cliff, I've got just 1.5 more questions before we go.
I'll start with the half question first.
So I guess really one of the big questions I think a lot of our audience that's viewing right now may have is, with COVID and what's going on currently in our situation, we know some folks have lost jobs. They're not going to be able to make mortgage payments. They're not going to be able to make their credit card payments. They're doing good to keep the lights on.
Sure.
What can we do, and how would you advise them to help and protect their credit score during all this hardship?
It's difficult. I have this conversation with so many people daily that are out of work, they're having a hard time with the payments. The best thing, the advice is always, if you do have credit cards, try to at least make that minimum payment. I don't care then at that point if you have that high utilization, just don't let a new late hit the credit report. What happens is if you keep high utilization, whether it could be at Christmas time, you bought a lot of gifts and maxed out all the cards. When you pay that balance down, you're going to gain those points back. But if you could avoid a late hit in the credit report, that's going to stay on there for 7 years.
Okay.
As far as the mortgage, that's a different situation, of course, because that's a higher number.
Good to contact those creditors and have conversations with them?
Absolutely, because there was when COVID first came out, many of the banks, you could call them, explain the situation, and they were deferring payments. So certainly make a phone call. I'm sure everybody's handling that differently.
Okay. All right. And one more question. This is a half question. How do we get a hold of you to learn more about your services as you help folks clean their credit up?
Yeah, my direct phone number is 855-973-2700. And if anybody has a question, it could be as simple as, hey, I just don't understand, or what does this mean? Be my pleasure to speak with them, do a free consultation, explain what's on credit reports, whatever somebody needs.
Very good. Well, I'm Cindy with Cindy Coggins Realty Group, Keller Williams Allen, and
I'm Michael with Farmers Insurance, Dean Hansen Agency in Allen.
and we are C Squared Insights. Y'all have a great evening, and thanks for stopping by and listening to us. We'll see you soon.
Bye, everyone.